And I think going forward, audit is not, it's a learning process, and we are here for purposes of continual improvement and not for prosecuting anybody, Senator Khalwale. So because there's a commitment for continual improvement, where I see it, I don't have a problem. And the fact that we'll be having continuous system audits, even before end of year audits, this, going forward, it will be something that will demonstrate a company that has a learning curve. So I think when you understand that perspective of audit, that this is a management tool for improvement, then you'll be okay. Thank you.
Honorable members, I want us to make progress on this matter.
Chair, as we make progress, can the company confirm whether they have internal auditors?
They have?
Internal auditors.
Internal auditors?
Yes, for the company.
I don't know. That should be one of the issues that we are going to look at in the audit report. So I don't want us to mix up issues. Let's leave it. I think there is a query, a related query to that somewhere. Issues of the failure to conduct governance audit.
Yeah, Chair, the reason why I'm asking this is because it's related to what we are handling. And if the internal auditors could have pointed at this, because as the governor said, it's improving their performance and a learning process. That even the internal auditors whom I can't remember during the introduction, if there is any who introduced himself as such, that they will also take note of that. Thank you.
Very well, but I want you to hold your horses until we get to that query. Let me just allow, for cautionary reasons, the legal officer to read out the provisions, and then members will allow us to move to the next query.
Okay, thank you, Chair. So this is the public finance regulations, specifically Regulation 22.1, which states that an accounting officer shall, in accordance with Article 226(2) of the Constitution and Section 149(1) of the PFM Act, be accountable to the County Assembly. Specifically, A, for ensuring that the most effective means of achieving a desired program outcomes are used, and effective systems of internal control, and the measures taken to ensure, for measures taken to prepare the financial reports that reflect a true and fair financial position of the entity.
I think there are other issues within the public sector accounting standards, which are very specific. Yes. What I will allow you to do, just we'll move on to the next issue, but before the end of the meeting, you bring all the relevant provisions to us. Honorable members, let's proceed to the next query. Auditor.
Thank you, Honorable Chair. Query number 1.2, unsupported bad debts written off. The statement of financial position reflects trade and other receivable balance of Kenya shillings 247,315,566 are disclosed in Note 18 to the financial statement. The receivables balance was reduced by a bad debts written off amount of 55,480,532. However, the supporting documents of approval of the debt written off by the company's board of directors and the county executive of the write-offs were not provided for audit review. In the circumstances, the accuracy and completion of trade and other receivable balance of Kenya shillings 247,350,566 could not be confirmed. Thank you, Honorable Chair.
Thank you. Governor, the management response.
Yeah, Chair, allow me to request the CEC Finance to respond.
CEC Finance.
Chair, the bad debts written off amounting to 55,408,532 These arose as a result of historical debts that accumulated over the years, despite recovery efforts and measures put in place by management. In line with the company's policy, management presented the debts for write-off to the board of directors. The board approved the write-off via a board resolution dated 8th February 2025, which was submitted to the Office of the Auditor General for review. A cabinet memo has been prepared for presentation to the County Executive Committee for write-off of the bad debts. Upon approval by the County Executive Committee, the bad debts listing shall be submitted to the County Assembly for further approval and thereafter inform the National Treasury. Prior year adjustments will be done in the financial year 2024-2025 to reinstate the balance of 55,408,532 in the company's books of accounts pending approval from the County Executive Committee, County Assembly, and National Treasury. Management has put in place measures to progressively reduce the receivables balance. Demand notices have been issued to defaulters to recover the debts. Other initiatives include debt aging analysis and verification undertaken in line with the company's debt management policy. Chair, we have attached various annexures explaining.
Auditor, your comments on the management response?
Thank you, Honorable Chair. Looking at the management response, this 55 million was eaten off as at 30th June 2024. However, management is looking for the approval after the write-off. If you look at the board resolution, it's dated today, February 2025, followed by a cabinet memo. So the approval process is taking place as
they've put in place, or they have put in place to recover this 55 million. You just go and write off 55 million public money. Chair, honestly, I don't know. Maybe the rest of the senators can say, but I'm not convinced.
I think, in all fairness, because you've raised issues, let me allow the governor to also give a verbal response to this query.
Thank you, Chair. First and foremost, it's important to understand the background of this. Exactly, proposed write-off is not been written off yet, because when you look at the financial statements, that 55 million is still in the trade receivables. So it's not a P&L item as of now. So that means it is still a receivable. Now, the process of writing off is quite detailed. And the first, of course, is the way the auditors say, demonstrating that these debts are irrecoverable. And one of the reasons is these debts are over 10 years. In fact, inherited from Lake Victoria North. You need to understand that this water company transitioned from Lake Victoria North. So some of these debts were actually debts which were inherited from the Lake Victoria North that was doing the work of last mile connection of water. So what we are going to do, which is now provided for, is to make sure meticulously, after the board did the write-off, which is, of course, a prior year, it is not affecting the financial statements of 2024. In 2024-25 financial year, the auditor will now at least have an opportunity of reviewing meticulously the steps that have been taken to write off, starting from the board resolution, the cabinet executive, the county assembly, and then the national treasury. As at now, the debtors have not been affected by the proposed, and the auditor can confirm that this 55 was reinstated in the trade receivables. Thank you.
Yeah, I think we need to go back to the auditor. From the explanation of the governor, is that the financial statements are not yet including this 55 million, because this amount is still in the receivables. So how did it become a query? Auditor, you need to...
Thank you, Honorable Chair. Even referring to the governor's response, he has indicated that they will do employee adjustment in the calendar year 2024-2025. Already as at 30 June 2024, the 55 million had been written off in the books. That's why this query came up. So what management is trying to do is to rectify that something they ought to have done the previous year, before that in June 2024, in the subsequent year 2024-2025. And I can confirm now that what they have indicated they will do. We reported as at 30 June 2024, and that 55 million had already been written off.
Where are your financial statements?
Chair, I can refer you to page 27 of the financial statement attached to the report.
Appendix?
Note 18 to the financial statement, Chair.
Just read what it is.
There's already an item on bad debts written off of 55.4 million, reducing the gross trade receivables from 330 million to 247 million, as reported. So that 55 million is already a write-off, disclosed in note 18A to the financial statement.
Okay, honorable members, Senator Chimera.
Thank you, Chair. Chair, let me first begin by, I really must commend the governor for this very bold step, because these debts are usually historical, and most governors fail to appreciate the fact that they need to write off certain debts. I think I've been vocal towards asking them, when are you writing them off? And the true intention around the writing off, Chair, is very good, but perhaps what was miscalculated was the steps before getting to the writing off. And that's what the auditor is really questioning, because we are seeing documents that are dated sometimes easier, yet the event has already taken place. So, Governor, you've written off your debts, but you're trying to sanitize yourself now by following the process. And that again speaks to two offices in this entity, your county attorney office and the principal legal advisor to this water sanitation company, Chair. I've also looked at the issue of the justification around writing it off. When you look at Annex Chair, I think BQ 123, Chair, it gives you a list of the debtors and a status that the accounts were dormant. So in my view, and not to appear like I'm really supporting what the county has done, but in my view, when you have a dormant account status, then you are not faced with the option other than just to write it off. So I think that was good, but for me, the issue, Governor, you need to look at is the procedure that you have not followed up to writing it off. Otherwise, I think it's an okay thing to do, so that at least it doesn't keep on repeating itself every year and every other year. So please, the two lawyers that are advising the Governor, Kazi Kwed. Otherwise, thank you, Chair.
Okay, any other comment before I give directions on this?
Chair, it's just that it boils down to the same thing we had said. The county executive knew what to do, but didn't do. The county executive knew what to do, they knew the procedure, but did not follow the procedure. It could be a right thing, as Senator Chimera says, we are not faulting them for writing off, but we are faulting them for the process.
Yeah, I think it is not the county executive, it is the board.
Yeah,
because this water company has a board.
Yeah.
The board made a mistake to write off the debts without following the procedure, which should have been, actually it's outlined in the response. So I think what we'll do is that auditor will task you to, the governor has indicated that appropriate reconciliation is going to be done in the financial statement for 2024, 2025. So we'll task you to follow up on that matter and report in the subsequent meeting on the audited report for 2024, 2025.
That's noted, Chair.
But the procedure needed to be followed. So that will also be noted in our report. So, honorable members, let's proceed to the next query. I think it's on material uncertainty related to going concern.
Thank you, Honorable Member. Honorable Members and Honorable Chair. Query number 3, material misstatement related to going concern. The statement of profit or loss and other comprehensive income reflects a net operating loss of Kenya shillings 5,400,381 and the Kenya shillings 6,354,903 for the current and previous year, 2022-2023, respectively. In addition, the statement of changes in equity reflect a negative retained earnings amount of Kenya shillings 325,683,286. This reflects a severe financial challenge facing the company, which they see significant doubt on its ability to operate as a going concern. In the circumstances, the company's continued existence as a going concern is dependent on the financial support of its creditors and the government. Thank you, Honorable Chair.
Thank you. Governor, the management response.
Thank you, Chair. Allow me to request CEC Finance to respond. Thank you.
CEC Finance.
Thank you, Chair. The going concern of the company is in doubt largely due to the World Bank loans borrowed by the Republic of Kenya through the National Treasury to construct bulk water supply infrastructure. The amount of the negative retained earnings is attributed to the cumulative figure of losses accrued annually due to provision for interest on loans borrowed by the National Treasury. The company, through a letter to the National Treasury on 16th March 2023, submitted that the obligation to repay these loans rests with the Republic of Kenya as the borrower as per the existing loan agreement and not the company. To improve the going concern status, management shall make prior year adjustments and recognize the accrued interest on World Bank loans in the financial statements for the period ending 30th June 2025. In the short run, the company, with the support of the County Department of Water, Environment, Natural Resources, Climate Change, is currently undertaking a number of flagship projects geared to expand the revenue base and boost profitability. These initiatives include rehabilitation of water treatment plants, plant works, ongoing project expected to inject an additional 6,000 cubic meters a day for Kakamega residents. The project is expected to be completed by the end of the financial year 2025-2026. The additional volume of water will consequently enhance the company's revenues. Secondly, Chair, the company is progressively realizing the last mile connectivity through the takeover of 4 more schemes in the county. From the feasibility study conducted, the uptake of the new schemes is likely to increase the company's revenue base, thus absorbing more fixed costs. And finally, Chair, timely repair of damaged lines and bursts, which will consequently reduce non-revenue water from 37% to 35% as per the projections. Reduction on non-revenue water will consequently result in additional revenue coming in estimated at Kenya shillings 3 million in the financial year 2024-2025. We have a number of next year to support our response. Thank you.
Maybe additional comments, Chair. This issue of a negative reserves, it is an issue or a matter that is coming on board because of loans that you are borrowed by the national government in 2007. And the executing agent then was Lake Victoria North. And when you look at the water schemes that we have financed, Tindinho and Liranda, some of those schemes, they're actually serving not just Kakamega County alone. They're serving Nandi County, Vihiga, and Kakamega. So it was wrong in the first place for the executing agents then to transfer the loan obligation to the Kakamega County Water Company, because this loan is rightfully supposed to be repaid by the national government because it's the borrower. That's number one. And that is why our proposal of the recognizing the accrual is what we'll need to get support from this committee, because that's the right thing to do. Number two, those assets are not even with us. Through the transfer deed, the assets were still retained by Lake Victoria North. So it's not proper accounting-wise to have obligations in one company and assets are still residing in another company. So our submission is, if we are allowed to recognize them, fair enough. If not, then the national government can on-grant those facilities to Kakwasco. After all, it is the responsibility of the national government to provide the water infrastructure so that the WSPs can only do the last mile connection. And this is a problem that is cutting across most of the counties. Thank you, Chair.
Auditor, what's your comment on the response?
Thank you, Honorable Chair. I appreciate the governor's response on that matter. And a number of areas that the governor has raised are current. So we can only confirm whether they will bear fruits when you do the audit for the 2024-2025. We reported the status of the company as at 30th June 2024, that they were still running at a loss. They only improved from the previous year, from a loss of 6.3 million to a loss of 5.4 million. And reversing that accumulated deficit of 325 million, 325.6 million will take a long time.
I also want you to comment on the issue that the governor has raised, the issue of the loan by the national government, which is being financed by the water company.
Maybe
you have an opportunity
before you respond, Chair.
Yes.
I'll request that we deal with that matter along with issue number 5, because talking about the same thing, the long outstanding trade payables. And the reference point here are the loans we are talking about. Thank you, Chair.
Trade payables. Auditor, what does the trade payables say?
Honorable Chair, I agree with the governor that the two issues are related, the way he has explained.
Can you read out the query, please?
Thank you, Chair.
On trade payables. So that
page 6 of the auditor's report, query number 5, on long outstanding trade and other payables. Page 6 of the Auditor General's report. Can I proceed, Chair?
Proceed.
Long outstanding trade and other payables. The statement of financial position reflects trade and other payables of Kenya shilling 671,951,887 are disclosed in note 24 to the financial statements. Included in the balance is long outstanding payables balance of Kenya shillings 480,678,432, which have been outstanding for more than 3 years. The long outstanding payables comprise of AFW of Kenya shillings at 8,387,165, World Bank Mumias of Kenya shillings 275,541,203, World Bank Lumakanda of Kenya shillings 63 million, 13,172, and the motor vehicles balance of Kenya shillings 1,067,367. In the circumstances, there is a risk of loss on public funds through litigations, interest, and penalties. In the circumstances, management was in breach of law. I thank you, Honorable Chair.
Governor, your written response.
Let me request the CEC to read the written response.
CEC.
Thank you, Chair. Explanation on the long-term payables, balance of 408,678,432 shillings, which have been outstanding for more than 3 years. The long outstanding payable of Kenya shillings 408,678,432 comprises of 401,611,065 shillings and 20 cents for accrued interest from loans of Kenya shillings 4,296,194,094 shillings that were borrowed by the Republic of Kenya from the Federal Republic of Germany and KfW Frankfurt, made in the year 2007, and a loan balance of 7,366,950 7,667,366 shillings and 95 cents from CFO Motors, borrowed by Kakwasco to finance purchase of 3 motor vehicles. The loans from KfW and World Bank were to finance the implementation of Water Sector Development Program, Phase 2, Stage 2. The project executing agency to whom the funds were channeled was the Lake Victoria North Water Works Development Agency. These funds were used to, for infrastructure development of the Kakamega water supply, Tindinyo treatment works. And Tindinyo is in Nandi County. The government of the Republic of Kenya borrowed a loan of Kenya shillings 1,654,992,498 from World Bank for infrastructure development of the Mumias water supply, stock Nambacha treatment works, and a further 302,463,225 for infrastructure development of the Lumakanda water supply, stock Kipkaren treatment works. In total outstanding loan amount to Kenya shillings 4,296,194,094 shillings. Management submits that the obligation to repay these loans lies with the National Treasury and not Kakamega County Water and Sanitation Company, based on the following aspects. One aspect, Chair, is that it is the mandate of the national government to provide bulk water infrastructure and therefore borrowed the loans to fulfill this mandate. Secondly, Chair, the National Treasury signed the existing loan agreement as the borrower and the Victoria North Water Company agency as the executing agency to the agreement. The company was therefore not party to the agreement. Number 3, a PFM Act requires that before a loan is acquired by a devolved unit, there has to be an approval from the county assembly and a guarantee from the National Treasury. These important procedures were not undertaken in this case. Number 4, ownership of assets acquired from the loans still vests with the Victoria North Waterworks Development Agency, the implementing agency of the loan agreement. Yet the liability was purportedly passed to the water company. Management is not able to recognize the loans in the company books of account without the corresponding assets. Following the above issues, Chair, it is clear that the principal loan and interest, therefore, should be recognized from the company's books of accounts. Management therefore requests the intervention of the Senate to ensure that the responsibility of the loan repayment is passed to the National Treasury as per the signed loan agreement. But the company is also suggesting that if in case that they don't do this, then the management recommends that the Republic of Kenya, through National Treasury, pronounces a vesting. This will require court approval, a vesting order of the assets in favor of the company and conversion of the loan liability into reserve. Thank you, Chair.
Chair, allow me to just refer the committee to the financial statements. The statement of profit and loss. Since the company reports are based on accrual basis, the interest accrued is actually recognized in our statement of financial performance of 24 million Kenya shillings. And this attributes the loss. The loss is attributable because of that provision. So if the action of derecognizing that obligation is approved, then the company will return to profitability because we are just providing 24 million for accrued interest when the indeed obligation belongs to the National Treasury. Thank you.
Auditor, your comments on this query? Honorable members, as you understand, we are covering two queries at the same time because they are related. I hope you understand that. So, Auditor, your comment on this one?
Thank you, Honorable Chair. One, so long as the matters are not be resolved, adjudicated by the governor, between the water company, the county government, the National Treasury, and the Water Works Agency, that is the Victorian Water Works Agency, definitely we will continue reporting on it. And if, as the governor has clearly indicated that if we remove that element of the 24 million from the statement of financial performance, obviously now the company will be profitable. However, to the extent that the matter has not been resolved, the way the governor is indicating, then the matter will remain not addressed. Then number two, we are not understanding how our liability was transferred to the water company without transferring the assets. How did the books balance? What was the corresponding double entry and credit entry, such that that particular liability found itself in the books of the water company? So, meaning that when you be, as indicated by the governor, at the point of derecognizing the liability or the payable, now, what about the asset? How will that account treatment be done? Share, admit that or submit that until when that matter is resolved, which is historical in nature, then the two matters will remain not addressed.
Okay, honorable members, I know the members who are here as new members in the committee, but we interacted with this matter in the last session we had on Kakamega water, and the committee directed that IGRTC to pick up this matter with a view of resolving it, so that this liability is not transferred to the water company. And it is not just Kakamega. We have all the coastal counties. You have seen when they appeared before us, they had the same problem. That's Kilifi, Mombasa, Kwale, and Taita Taveta, where the regional water body, in that case Coast Water, borrows money through National Treasury, and then the water companies are made to pay. And that has been outstanding in the books for so long. So it is a similar case here. So now that the IGRTC is toothless, it has done nothing, I think as a committee we need to find ways of advising the Senate how to navigate this matter. Because we even carried out an inquiry on the relationship between water service providers and regional water blocks. And we find that this problem is affecting most of the water companies around. Because if the regional blocks are supplying bulk water and they are supplying at a fee, then why again should counties, the water service provider, pay for the loan? So I think this is a conversation that it was already ongoing. We are almost ready with the report on the same, which will be submitted to the Senate. But I think that's a matter that requires serious intervention by the Senate so that we can deal with this issue of long outstanding payable by water companies. Let me allow Senator Halwale to chip in.
Yes, Mr. Chairman, I'm hearing you. True to the Constitution, we're supposed to protect, as Senate, the county governments, and therefore, Governor, on the issues of assets and liabilities that transfer between the two levels of government is a responsibility we wish to undertake, and we are committed to it. Because when you dissect it further, you find the guys at the national level, they are keen on the assets. But when you talk about liabilities, the state's pushing it to the county governments. We are the only ones who can sit on it to arbitrate, Mr. Chairman.
Chair.
Yes, proceed.
Chair, before the House takes a resolution, maybe it is also, it will be advisable that we engage the CS Treasury on this matter.
We have already engaged. Actually,
Right.
we met all the water bodies. We met the Treasury. We met the Ministry of Water. We have met the relevant committee of Council of Governors. And even we had a retreat with all these stakeholders in Mombasa and agreed on these issues. So I think what is remaining is next week we refine the report and have it presented to the Senate.
Yeah.
But this particular issue of dealing with this matter, I think is an issue that we will need to include it in the report.
Yeah.
Yeah.
But otherwise, Chair, in this particular case, I sympathize with both parties, the water company and the auditor, because the auditor will continue reporting on it until it's concluded, and the water company is in a catch-22 situation.
Yes.
But, Mr. Chairman, at the Committee of Finance, we were able to sit on this issue with the CS Finance, and we pronounce ourselves. So I'm happy that when it comes to the Senate, then my committee will also give the necessary support to your committee, Mr. Chairman.
Thank you. Thank you very much. Yeah, so honorable members, there were two issues. The issue of long outstanding payables, which we have just said we are taking an action, and then the issue of material uncertainty related to going concern. My clerk is advising me, the governor, that this query has a relation with another query here called the excess wage bill. That could this be also contributing to the loss-making scenario. So members, you will allow me to jump to that query on excess wage bill, which I will allow the auditor to read, and then the governor can respond.
Thank you, Honorable Chair. Issue number 3 on excess wage bill. The statement of profit or loss and other comprehensive income reflects staff costs amounting to Kenya shillings 180,074,012 are disclosed in Note 10 to the financial statement. The amount is equivalent to 49% of the total revenue of the company of Kenya shillings 63
is 32,165 against the required ratio of 30%. Additionally, the current staff numbers are 167 staff, which differs from the recommended industrial requirement for the water company of 90 staff, resulting in excess staffing of 77 personnel. This is contrary to Table 3.2 of WASDEB Impact Performance Report number 16/24 of Kenya Water Sector in 2022-2023 financial year, which classifies Kakamega County Water and Sanitation Company as a very large water service provider and provide an acceptable sector benchmark for staff portability to be 5 per 1,000 active connections. In the circumstances, management was in breach of the law. Thank you, Honorable Chair.
Governor, your comment?
Thank you, Chair. Allow me to request CC to respond.
CC?
Thank you, Chair. Our response is as follows. That after the transfer of a service of 38 staff to rural company in the year 2022, January, Kakwesco reorganized its staff and appointed various staff in certain positions for continuity of service delivery. The county executive recalled the transfer of 38 staff and reinserted them in existing ranks with the company, which cost high wage bill. Maybe just to explain a bit there is that the staff who had been taken to Kakamega Rural Company went to court.
No, CC, just finish reading and then you give the explanation after.
Management has put the following measures in place to reduce excess wage bill. So number one, management is undertaking restructuring to streamline the staff productivity and workload rationalization. Then number two, management has also absorbed 4 new water schemes to enhance service delivery to the people of Kakamega County. A feasibility study was conducted and the schemes have been deemed viable. They include Chembeli, Andidi, Lubao, and Chevoso. Management intends to redeploy several staff to work in the new stations as a way of complying with the regulator on staff productivity ratio. It is estimated that these new stations will enhance the company's revenue by Kenya shillings 500,000 per month. Management has put in place strategies to reduce non-revenue water from 37% to 35%. This is estimated to increase the company's revenue by Kenya shillings 3 million in financial year 2024-2025. And number 4, Chair, management has frozen new hires and replacement of vacant positions. And 5, the company has put in measures to activate inactive and dormant accounts that is aimed at expanding the revenue base. We have various annexures to support our response.
Okay, now you can give your explanations.
Okay, thank you, Chair. The executive directed that the 38 staff be returned. You know, we started a rural water company, and we seconded a number of staff from the county water company to the rural water company. Now the staff went to court, challenging why they've been seconded, and the court ruled, decided that we go and settle it out of court, so that we have a discussion between the staff and the company, so that the staff are brought back. So when we were ruling out of court, the then cabinet decided that the staff, through a cabinet memo, be taken back to the company, and that's made the number to be big. Thank you.
Okay, any further explanation from the governor? You have any? Okay. Auditor, what's your comment on the response?
Thank you, Honorable Chair. The status is as reported, and I can indicate that the previous year, 2022-2023, the ratio was at 42%. So it's deteriorating from 42% to 49%. Why? Because the staff cost increased from 158 million in the previous year to 180 million in the current year. And in addition to that, revenue decreased from 376 million to 363 million. So the status is as reported, Honorable Chair.
I wanted you to comment on this WASREB requirement that the recommended industry staff level is 90. What is it based on? Because staff levels will be dependent on the scale of the company. So you can't limit it at 90. Let me give you an example. Nairobi Water. Nairobi Water is such a massive company. So why would they limit? They employ over close to 5,000 people. So why would the WASREB set a limit of 90 people to be working for a water company?
Thank you, Honorable Chair. That was based on a ratio of 5 staff in every 1,000 active connections. And the Kakamega water was classified as a very large one. So for you to arrive at that 90, that was based on the benchmark of 5 members of staff against 1,000 connections. Chair.
Okay. I think you have answered. Senator Alwale.
Yes, Mr. Chairman, my concern is not so much the number of people working. In fact, for Barasa and I, the more people we give jobs, the better. However, the question of the accuracy of that data, auditor, do you have evidence that these workers are actually there, or they are ghost workers who are being paid these 180 million shillings?
Honorable Chair, I can confirm to this committee that all the 167 members of staff that are working or that worked for Kakamega Water are indeed there. So we didn't do a staff audit individually, not to confirm the numbers. And I can promise, because of the way we work and what the Senator of Kakamega has indicated, for this current year of 2024-2025, I promise the committee that we are going to do a staff audit. 167 number is quite a small number. You'll be able to do that because we are in Kakamega. For the county government, Honorable Chair and Honorable members, we have been doing in-depth payroll audit since January this year. It ended last week on Friday. That was a World Bank funded audit. For the county government, you'll be able to get a very in-depth report on this. For this water company, I promise that you are going to confirm whether indeed these 167 are working for Kakamega Water Company. In addition to doing the 100% count, we will confirm through the audit test that they were productive in the current year, 2024-2025. Thank you.
Any more question, comment? I think there is none. I think on this particular query, Auditor, you have promised that you will do an audit, and the county has also given a raft of measures to enhance productivity. So I think we will be keeping a watch on that. All this is done to ensure that the company makes profit. So, honorable members, we proceed to the next query on non-revenue water.
Thank you, Honorable Chair. The query of non-revenue water. Query number 1, under lawfulness and effectiveness in use of public resources, non-allowable loss of non-revenue water. During the year, the review, records from the company revealed that it produced 4,737,376 cubic meters of water, out of which 2,983,553 cubic meters, or approximately 63%, was distributed and billed to customers. However, the balance of 1,743,823 cubic meters, or approximately 7% of the total volume produced, was not billed. This is contrary to the Water Services Regulatory Board, WASREB, guidelines, which provides an allowable maximum limit loss of 35% for every cubic meter, or 435,956 cubic meters. In the circumstances, the effective management of water negatively impacted on the company profitability and resulted in an allowable loss of non-revenue water of 1,307,867 cubic meters. Thank you, Honorable Chair.
Governor, your management response.
Yeah, thank you, Chair. Allow me to request CC to respond.
CC, I can see your response is too long. I think you don't have to read out the contents of the table. Yeah, just read out the rest, the table, or we can see it.
Thank you, Chair. The management response. Major causes of non-revenue water are old, dilapidated infrastructure and functional meters, the destruction of pipelines during road construction works, illegal water connections, pipeline and water infrastructure vandalism. In the company's 2021-2026 strategic plan, non-revenue water management is a key thematic pillar. Further, the company has developed a non-revenue water reduction policy and strategy, which is being implemented and monitored regularly by management. During the year under review, upgrading of Maram roads to tarmac roads by both national and county governments resulted in the destruction of a number of water pipelines by road networks. We have the Kakamega by roadwork contractors. We have Kakamega area. There are a number of streams, a number of projects that were done in Shitoli area, in Mumias area, and in Shinyal area. Management has taken the following mitigation measures for progressive reduction of non-revenue water. So we have a table there, where the company has maybe if I just summarize, the company has engaged the national and the county government and resolved to ensure that the company is involved during design and construction of the roadworks. Number two, the company has enhanced inspection and disconnected accounts in carrying out continuous meter sealing to deter illegal water consumptions and procedurally installing disconnected customers to deter water theft. Number three, the company has procured portable meter test bench for testing and calibration of consumer meters. Further, the company has partnered with the water service providers and Kisumu Water Sanitation Company for bulk meter calibration. Number four, the company has zoned the water supply infrastructure in terms of pipeline water measures, pressures in order to guide on class of pipes to use and upgraded the age-dilapidated water pipes from UPVC pipes to HDPE pipes, which are most robust. Number five, the company has recognized the implication of the high non-revenue water levels as its financial viability and approved the non-revenue water management policy. And lastly, Chair, the company has established a non-revenue water section whose responsibility is to implement non-revenue water management strategies. The above mitigation strategies has management has reduced non-revenue water from 42% as at 30th June 2023 to 37% as at 30th June 2024. We have put annexures to support all those activities that we have explained, Chair. Thank you.
Okay, Auditor, your comments on the management response?
Thank you, Honorable Chair. I can confirm that management has reduced non-revenue water from 42% from the previous year, 22-23, to the current 37%. However, the ratio is still above the 25% by 12% allowed by WASREP. On the plan to further reduce the non-revenue water indicated by the governor, we are going to confirm in the current year 2024-2025 audit whether there will be an improvement or a deterioration from the current 37% threshold. Thank you.
Okay, maybe you needed to tell the members what component of that non-revenue water is physical losses and what component is commercial losses. Did you get that information?
Honorable Chair, I don't have that information with me here, but management, because they are here, they can give us that information. But the estimated water sales related to that 7% was 151 million at a rate of 87 shillings per cubic meter.
Okay, honorable members, comments, questions?
Chair, I'd be interested in knowing the decline, if any, of the percentages on non-revenue water, perhaps for the last 3 years, just to see if the county is progressively reducing that percentage, or they are stuck somewhere. Will you have that data?
Chair, I don't have that data at the moment, but there was an improvement from 42% to that 7%. That one I can confirm later.
42 was last time when they appeared before us. So I think it's commendable, Governor. You have gone down by 5%. Makofi. So anyway, I think we don't want to belabor on this. They know what they need to do. They have put there the measures. So auditor, you will be monitoring these measures, and let's see the figure moving down. But I just wanted to advise that one of the counties that appeared before us that had very high non-revenue water, that was Malindi Water in Kilifi County. But when they appeared before us a few weeks back, they moved from the very high non-revenue water to 16%. So I think you may want to benchmark to know what is it they did to hugely reduce their non-revenue water to 16% for Malindi Water. They may have overhauled the infrastructure, or they did a lot of improvements to their infrastructure, or they made improvement to the way they handle the commercial losses. So I think that would be very important. And secondly, I think MD, you are here. I think you need to have data on the losses due to physical losses and commercial losses, so that you get to know how to resolve the problem. Because we, from our experience, we have come to note that a large percentage of the non-revenue water is commercial losses. Yeah, commercial losses. So they need to be addressed. So otherwise, members, I think because of time, we will stop there. But I just want the governor maybe to comment on one issue before we close the water. The irregular expenditure on honorable members of county assembly. Just a comment, what you are doing on it.
Thank you, Chair. First, I want to confirm that the expenditure on the members of the county assembly, in our perspective, was not irregular, because they have one of the core responsibilities of representation. And when we have a program that we want to implement, there is always a detailed public participation. And on this particular one, there are water schemes that we are being funded by the World Bank, and we needed to get all the wards on board. So because it was our responsibility we engaged the representation of the people at the ground level, who are the MCAs, to help us in public participation. So this expenditure was not on oversight to compromise independence. And that is why, in my view, I still hold the fact that the expenditure on the MCAs, especially when it's cost to facilitate public participation, was not irregular. And going forward, we even have guidelines from COB that where the county assembly is undertaking their mandate of oversight, they have to take care of their costs. But on this particular one, looking at the fact that we needed to onboard those programs of LOCA, and of course before then, the process of public participation, we had to engage the MCS. But we are very alive to the fact that any expenditure to MCS for oversight, they take their costs. Even when they come here for this meeting, they have taken care of themselves. Thank you, Chair.
Okay, I don't want to open a debate on that. I think, Auditor, you have heard what the governor said, and I think we need feedback in the subsequent audit meeting.
It's noted, Chair.
Thank you. So, honorable members, we will proceed to look at the municipalities. Give you 2 minutes to settle down. Legal.
Chair, Architect Patrick Kundu, the CCM, lands, housing, urban areas and physical planning. Thank you.
You have forgotten your job.
Chair, Violet Ofisi, Municipal Manager, Kakamega Municipality.
Chair, I'm Joseph Ngoko, Accountant, Kakamega Municipality.
Chair, I'm CS Chris Ombunya, the Manager, Mumias Municipality.
Chair, I'm Aneta Seo, Accountant, Mumias Municipality.
Okay, thank you, Chair. Balex Pius, Vice Chair, Paga Committee, Kakamega.
Thank you, Chair. My name is Obwaka, MCA from Miaswell Sub-County, member.
Thank you, Chair. My name is Timothy Anzetse, Chairman for Lands, Housing, Urban Areas and Fiscal Planning.
Chair, I'm Mulwale Maligo Ann, a member of Park Committee. Thank you.
Chair, I'm Dennis Wekesa, Chief of Staff.
Very well. Karibuni sana to the Senate. So, honorable members, we are handling the two municipalities as we agreed in the pre-meeting on the strategy of dealing with these two municipalities, and considering the time constraint, we have seen that the issues are the same. So I think we are going to deal with the issues concurrently, the issues which are similar in the two. And the issues which are similar are matters of budgetary control and performance, non-collection of on-source, own-generated revenue, the lack of operational autonomy, and operating municipality without an approved budget. Those are the issues that we are going to consider across board. But we also have an issue which members we wanted to address. And this issue, we had addressed it earlier as well, Governor. This issue of inaccuracy in financial statements. We have it in Mumias. Mumias has an inaccuracy of current assets balance and confirmed cash flow generated from operating activities. Kakamega has the inaccuracy in the statement of comparison of budget and actual amounts, anomalies in the annual report and financial statements. Yes, all that. So we know that those issues are subject for adjustment, but the members are very keen to address it, that matter. Maybe before they allow the members in, Audit, I want you to comment on the aspect of inaccuracies.
Thank you, Honorable Chair. Starting with the Kakamega Municipality, we have several matters on inaccuracies. One, unconfirmed property, plant, and equipment balance. That was to do with the failure to provide depreciation policy on road constructions and ownership document for a parcel of land where market had been done by the county government. Another matter on accounting errors, Number 2 is on unconfirmed depreciation charge for the year. Share number 3, a similar matter on accounting error, inaccuracy in the statement comparison of budget at the actual amounts. And finally, share on number 5, anomalies in the annual report and the financial statement. Share number 4 on unconfirmed transfer from county government has been explained. So those 4 issues relate to errors to do with accounting. Share with your permission, can I go to Mumias?
Yes.
In respect to Mumias municipality, number 1 is on inaccuracy of current asset balance. Number 2, unconfirmed cash flow generated from operating activities. Number 3, unconfirmed transfers from the county government. All those relate to accounting errors.
So maybe members, before I allow you in, let me hear from the governor.
Thank you, Chair and honorable members. Allow me to request the CEC Finance to read the response.
I don't want the response to be read because you are trying to manage time. I just want a general comment on this issue of inaccuracies and accounting errors. Moving forward, how do you intend to deal with this problem?
First, I want to state that some of the inaccuracies arise because of the timelines, and we have already been briefed on the Section 62 of the Public Audit Act, where during the audit period, explanations should be given during the audit, not after the audit, including documentation. Because I see some of the transfers that have not been explained. When you dig deeper, you'll find those explanations and the supporting documentation was actually supposed to be given at the time of the audit. And as part of the learning curve, after this session, of course, I'm going to have a conversation with my members just to highlight on those issues. Number 2, we are trying to empower and make sure that those municipalities, they have a very versatile board and management so that we work on capacity issues. Because as you can see, some of the issues are just basic presentation accounting issues. And this again, through detailed capacity building that will insist on the board and the management. I'm sure in the next financial audit, this will be things of the past. And I've committed to the Auditor General that we'll want during my tenure to have unqualified audit reports from all the agencies and the executive of Kakamega Audit. So that commitment is there. But more importantly, is active participation in the entry meetings and exit meetings for all the senior executives, the CEO, the chief officers, and also the CECs. They must actively participate in the entry meeting, because during the entry meeting, this is where the auditor will highlight the expected schedules and the fact that we are addressing this issue now proactively. It will be a thing of the past. Then lastly is to make sure that all the prior issues have been addressed even before the end-year audit is done. I think, Chair, with those specific interventions, I'm very pretty sure that some of these basic, I can call them high school administrative mistakes, will be a thing of the past. Thank you.
Chair.
Yes, Senator Tobiko.
Chair, although you have allowed the governor, and because of the constraint of time, which we understand, although you have allowed him to make a general comment, most of the queries that the auditor has raised are basically in both institutions are basically on accounting errors, and which you have gone through actually. Chair, and the governor was going ahead to give the CC a chance to respond. My thinking was, although I have also seen a query by the auditor on the independence of these institutions, my thinking was these are independent agencies operating independently that have, qualified accountants handling their financial statements. As a chair, I would want us to go beyond the governor and the CC and get to know those responsible in both agencies, those responsible for the financial statements.
Okay, so maybe we can get that from the auditor. The particular accountants who signed the financial statements for Mumias and Kakamega.
Thank you, Honorable Chair. In respect to Mumias municipality, the head of finance who signed the financial statement is by the name Ms. Annette Aseo. She has not indicated her ISPAC number, Chair.
Annette, is he here? Is she here? Oh, Annette, you are there. What's your ISPAC number?
I'm in the process of achieving it.
How did you sign financial statements if you are not a member of ISPAC? Anyway, can we have for Kakamega?
For Kakamega municipality, the name is Mr. Obodi S.I. Angi, ISPAC number 1761.
Clerk, can you check the status? Governor, we are doing all this because as a committee, we want to be very strict on the issue of preparation of financial statement so that we avoid so many queries coming in the way. This CPA Okere Ismail Angi, ISPAC member number 73. It's what? 17361. Membership status inactive. Status not in good standing. Is Okere here? Okere. Okere, is he here?
Chair, the CPA that signed the accounts retired. I think it's one of the succession issues, but on the autonomy that Senator Perez has raised, that is what we want to achieve, because we want these municipalities to be autonomous so that they are in charge of all the operations. As at now, they are semi-autonomous.
Okay, we'll start from there when we look at the queries. So,
Chair.
Yes. Yeah, Senator Siemo.
Thank you. I've been holding my horses until I expected you to tell me to release them. However, I want to appreciate the honesty of the governor. As he responded, actually, that honesty is rare. Thank you, Governor. Secondly, Chair, looking at autonomy. My question to the governor is to give
Going to it.
Yeah. Sure.
Here we are dealing with the matter of inaccuracies and errors. Senator Chimera?
Okay, I just wanted to, and with a lot of respect and humility, Chair, to just make a comment on the issue on these statements being signed by what would appear like they are not qualified personnel. And it's not an issue affecting you, Governor, alone. It's cross-cutting. I'm just wondering, auditors, when you are sitting in Kakamega as you audit and statements are brought forward to you to verify and work on, you don't check the status of these accountants at that point in time. You have to wait for you to come and embarrass them before us in Nairobi. I mean, these are things you can check in Kakamega and decline to accept those statements so that it is not an issue for us to belabor on. I really, auditor, I'm not happy with this particular trend.
I want us to,
these are things you can check from the ground.
I want us to leave that out because, you know, the auditors are part of us. So that is a matter to be raised internally.
Okay,
yeah, internally, because it is like questioning another member. So let's leave it. We will deal with it internally. But the point is that the financial statements are supposed to be signed by a qualified accountant, an ISPAC member, so that they are accountable for what they sign for. We are not saying the young lady will not become an ISPAC member. I'm sure she's working very hard to get there. But as a standard, even in the public sector accounting standard regulation, it requires that. I think this is a learning process which our accountants are learning so that in the next meetings, we do not have these kind of things happening again because errors like this, though they are going to be corrected, but they make your report look bad with inaccuracies. So I think that is a point that should be noted so that next time, if you are an accountant and you sign financial statements which have material errors, this committee can recommend action to be taken against you by your professional body, ISPAC. And in fact, we have even, starting next month, a representative of ISPAC is going to be sitting in our meetings to receive direct instructions from us on some of these things because we want to ensure that the statements that are being processed for audit or that are appearing before us, they meet the standards defined in the law. So that was just something we wanted the accountants to learn from us. So, honorable members, I think we can proceed to now the substantive query. And because everything seems to be going around autonomy, and even the other queries could be related to autonomy, I wish to ask the auditor to start with the query on autonomy, which also affects the two institutions. I think we'll use Kakamega as a base. Lack of operational autonomy of Kakamega municipality. That's also an issue of Mumias. So you proceed to read out the query, auditor.
Thank you, Chair. Lack of operational autonomy of Kakamega municipality. During the year under review, it was observed that only office operations were carried out by the municipality board, while project implementation was carried out by the county executive through the Department of Lands, Housing, Urban Areas Development, and Planning, and the Physical Planning. This was contrary to Section 21(1)(a) of the Urban Areas and Cities Act 2011, which gives municipalities executive authority as delegated by the county executives. In the circumstances, management was in breach of the law. Thank you, Honorable Chair.
Governor, your management response.
Thank you, Chair. Let me allow the CEC Finance to respond.
CEC Finance.
Thank you, Chair. Response is as follows: that the county executive is in the process of granting full autonomy to Kakamega municipality. The following steps have been taken to ensure Kakamega municipality gains its full autonomy. Number one is appointment of municipality board by the Gazette Notice number 10370, dated August 2nd, August 2023. We have also gazettement of the assigned functions through Gazette Notice as shown below. Number three, appointment of municipality manager and designated as an accounting officer for the municipality. Then number four, secondment of key technical staff in departments within the Kakamega municipality. These measures are aimed at ensuring full autonomy of the municipality in compliance with Section 21(1)(a) of the Urban Areas and Cities Act 2011, amended in 2019. We have attached annexures to show all those appointments. Thank you, Chair.
Just in addition, in terms of timelines, I think it's important. I know Senator Betty is keen on the timelines. Now, I've given direction for the costing of all the functions within the municipalities. That is, and by the way, for now we have 5 municipalities. Besides Kakamega and Mumias, we have Butere, we have Malava, and Matunda municipalities. So these municipalities, we are going to cost the HR functions and any development projects, so that by December 2025, I want to commit that this is going to be, I think, of the past, because I formed a special committee that is going to do that, so that the revenues being collected within the municipalities based on the costed functions, we are going out to start committing the boards and the management of those municipalities and the staff thereof to at least now operate like a limited liability company, responsible for revenue generation and for the services. So in terms of timelines, this is going to be done by December. But as at now, we have secondary staff to the municipalities, engineers, the fiscal planners. We have the CEO here, we have accountants that we have seconded to the municipality, because we have not defined the revenues that will be accrued to municipalities after the costing of the functions. So that one is work in progress, and I expect by December this year, I think that will be done, so that now in the subsequent audits, we will now be looking at municipalities as fully independent and doing their own operations. Thank you.
Auditor, your comments on the response?
Thank you, Honorable Chair. I can confirm that gazettement of the board took place in the year 2023 and a municipal manager appointed. However, as indicated by the management, operational autonomy has not been granted. And what the governor is indicating is that it will happen by the end of the year 2025. So, Chair, even for the audit of 2024-2025, it's highly likely that this particular matter will recur, because as he has indicated, then the management are not given operational autonomy to the municipality. Thank you.
In you to make your comment, and this is where Siengo, you will now not hold your horses. I will allow the legal officer to read out, I think, section 12 of the Urban Areas and Cities Act, and maybe the relevant parts of section 20 of the same act on the issue of, I think, managerial, functional, and financial independence of municipalities.
Thank you, Chair. Section 12 of the Urban Areas and Cities Act, which deals with structures and management of cities, municipalities, states that The management of a city and municipality shall be vested in the county government and administered on its behalf by A board constituted in accordance with Section 13 or 14 of this Act, B, a manager appointed pursuant to Section 28, and C, such other staff or officers as the county public service may determine.
I think if you listen to that section, it says it will be administered by the county government, and then proceed.
So it is vested in the county government and administered on its behalf by a board constituted in accordance with Section 13 or 14, and a manager appointed pursuant to Section 28, and C, such other staff or officers as the county public service may determine.
Yes. What does that mean to you? You can explain to the members. Why I'm bringing this up is the municipality they have autonomy, but they are still answerable to the county government. I think that must come out very clearly, because we have seen in some counties where the boards wants to operate completely independent of the county government. I think that clarity is very important. Proceed to Section 20.
Thank you, Chair. Section 20 of the same Act deals with governance and management functions of a board. Subsection 1 states as follows: subject to the provisions of this Act, a board of a city municipality shall A, oversee the affairs of the city or municipality, B, develop and adopt policies, plans, strategies, and programs, and may set targets for delivery of services, C, formulate and implement an integrated development plan, D, control land use, land subdivision, land development, control land use, land subdivision, land development, and zoning by public and private sectors for any purpose, including industry, commerce, markets, shopping, and other employment centers, residential areas, recreational areas, parks, entertainment, passenger transport, agriculture, and freight and transit stations within the framework of a spatial and master plans of the city or municipality as may be delegated by the county government. E, as may be delegated by the county government, promote and undertake infrastructural development and services within the city or municipality. F, develop and manage schemes including site development in collaboration with the relevant national and county agencies. G, maintain a comprehensive database and information system of the administration and provide public access thereto upon payment of a nominal fee to be determined by the board. H, administer and regulate its internal affairs. I, implement applicable national and county legislation. J, enter into such contracts, partnerships, or joint ventures as may consider necessary for the discharge of its function under this Act or any other written law. And K, monitor and where appropriate regulate city and municipal services where those services are provided by service providers other than the board of the city or municipality. I, prepare and submit its annual budget estimates to the relevant county treasury for consideration and submission to the county assembly for approval as part of the annual county appropriation bill.
Yes, I was seeking that to be read out because that makes our work very easy, because even the other queries are answered by that Section 20. Honorable members, there are issues of budget. Approval of budget has to be approved by the board. That's why we have a query here, operating without an approved budget. We have the issue of revenue collection. Again, the revenue collected is not banked in the accounts of the municipality. Again, that is addressed by that. We have the issue of even staffing. Governor, you had indicated that you want to second key technical staff in the departments, in various departments to the municipality. This law does not talk about secondment. It says you need substantive staff to the municipalities, because in other counties, I know the auditor, you have raised a question on staff cost being met by the executive. So even the issue of secondment, I think it's a matter that you need to relook at it. Otherwise, the auditor will still raise a query on why the executive is financing the salaries for the people seconded there. So maybe I can hear from you, governors, before I allow members to chip in.
Yeah, I think the provisions under section 12 and 20 are very clear. And as I've demonstrated, the secondment right now, of course, is not complying with those provisions. But we have the commitment to do the right thing and comply with the Urban and Cities Act. And for me, in terms of the budget, I think, again, it is very clear from that section 20 that the budgets are prepared, even as at now. They're prepared and approved by the municipality boards. And then, of course, they become an input into the executive budget under the relevant ministry before approval by the county assembly. I think to a certain extent, that seems to be complying with that part, but the essence here is full autonomy through that delegated responsibility. But of course, we still are accountable. And I like what you've highlighted, Chair, that the county government is still accountable for the operations, despite the delegation through those relevant sections. So our commitment, and where I see it, this is something that I'm very alive to it. It will help us address many issues, including wage bill issues and those ratios concerned. So it's a positive thing that we are committed to make sure that it happens as prescribed by my commitment in the management response. And by December, I know the audit of 25-26 will confirm the management action as we move towards financial autonomy over the municipalities. Thank you.
Honorable members, Senator Siango.
Chair, I think the governor addressed my concern about the autonomy and the time frame. However, in the process of preparation of budget, once the board does that, I think the transmission to the same, to the county assembly for approval is very key. So, Governor, focus on doing the right thing. Thank you.
Senator Tobiko.
Chair, my only concern is that the governor is responding well, but in a futuristic manner, that they will do. You see, this thing is about us at the time of the audit. So you didn't do. So where does that leave us? That we also go the way that the governor will do, the agencies will in future be independent, they'll get their operational independence, they'll get their financial independence. I think now we will just be creating a narration. We needed valid responses that will exonerate the county government, or that will show that the queries that the auditor has raised, you know, explainable or not there. So we wanted to respond as at the time of the audit. Why was this not done? Otherwise, then, Chair, we will always be treated to, in future, this will happen. In future, this will happen.
Yeah, but I think this is a house of record, and the governor is on oath. He has made that promise on oath. So ours would be to wait and see what happens. The auditors are here. So we will hold the governor accountable if he does not meet his promise then. But at least the goodwill is there. The goodwill to do the right thing is there. But in our report, we, you know that we will make our recommendation based on the audit report, but with a rider that something is being done about it, which we will continue monitoring. I'm sure the members of the county assembly are here, and they will also be doing their primary oversight role to ensure that this is done. Governor, your last comment before we move to the next.
Yeah, I just want once more to go on record that the matter, yes, is still unresolved, but there are progressive steps that we are taking to achieve that autonomy, Senator Paris. And because the goodwill is there, and we have documented steps towards that, I'm very confident that this matter will be resolved. And that's why, even on the budgeting aspect and all other areas, including allocating development budget for those municipalities through the special conditional grants, those are happening. But all in all, on oath, it is my desire really for these municipalities to be autonomous, because it will sort out so many problems which we are having in the county executive, especially on the issues of the wages. So that one, I can assure you that I'm committed to ensure that the 5 municipalities are autonomous. Thank you.
Okay, but Governor, there are some simple things that will not, maybe will not wait until December, like this query on lack of evidence that the funds are being banked in the municipality accounts. Maybe you can talk about that.
Yeah. Like what I said is the funds from the municipalities, they're actually collected by our revenue agency across the board and reported as such. But once we designate that this municipality, all the revenues will be banked in the municipality, those are some of the specific financial strategies that will help us to transfer, because for purposes of financial accountability, all the revenues collected by the revenue agency are banked in a designated account, not just a municipality account, because the revenues are cutting across. But going forward, since the commitment is there, I think it is something that, and as I said, when we do costing of the functions, you may even find that the revenues being collected by Mumias are not sufficient to support the payroll. And that's why I said we are going to do the costing of the functions so that we designate appropriate revenues to support those municipalities for them to break even, because the mandatory responsibility is for service delivery, but not for them to make profit. But the commitment is there, Chair. Even issues of opening accounts specific for the municipalities for purpose of collecting the revenue will be designated once we do the full process of making them autonomous. Thank you.
Okay, so I think, honorable members, we make progress on this. This query, you'll agree with me that is directly related to the other queries that we had marked on operating the municipality without an approved budget, on the issue of non-collection of own-generated revenue. Yes, so I think the last query we look at is budget control and performance, and I think we can use MUMI as a basis. Auditor?
Thank you, Honorable Chair. Budgetary control and performance. The statement of compliance of budget as actual amount reflects final received budget at actual amount on comparable basis of Kenya shillings 108,266,070 and Kenya shillings 17,177,563 respectively, resulting to a funding of Kenya shillings 30,088,507 or 20% of the budget. Similarly, the municipality expended Kenya shillings 100,927,289 against an unbalanced budget of 127,852,281, resulting to a performance of Kenya shillings 36,925,002 shillings, or 21% of the budget. The underfunding and underperformance affected the plan activities and may have impacted negatively on service delivery to the public. Thank you, Honorable Chair.
Governor, your management response.
Thank you, Chair. Let me allow the CEC to respond.
CEC.
Thank you, Chair. And the funding of Kenya shillings 30,088,507, or 28%. The underfunding was as a result of the inability by the county government of Kakamega to transfer funds totaling to 30,088,507 to Mumias municipality due to delayed exchequer release by the National Treasury.
I think you are reading for Kakamega. We were looking at Mumias. Oh, sorry. Sorry.
You made a mistake. County government of Kakamega, yeah. It's from Mumias.
Okay, proceed.
Explanation of unbalanced budget of Kenya shillings 108,266,070 cents against Kenya shillings 127,852,291. Mumias municipality had a budget of Kenya shillings 108,266,070 for the financial year 23-24. However, the difference of the Kenya shillings 19,586,221 shillings was depreciation, which was captured in the statements of a comparison of budget and actual amount. The depreciation amount is a non-cash item, which is not provided for in the budget. And the performance of 26,925,002 shillings, or 21%, the underperformance resulted from a non-disbursement of funds from county executive to municipality due to late disbursement of exchequer from the National Treasury. We have attached annexures to explain further what we have read.
Auditor, what is your comments on that response?
Thank you, Honorable Chair. Number one on performance, it is a fact that the municipality was underfunded. And it is also a fact that the municipality had spent on the funds. Then on an imbalanced budget that the governor has explained, this one again relates to accounting error because the management included depreciation in the statement of comparison of budget and actual amount, which ought not to have been included there. Therefore, the matter is not addressed as indicated.
Okay, honorable members, and maybe before honorable members come in, I would like a comment from Constance from Control of Budget, who is also a resident of Kakamega, on the issue of late disbursement of funds by Treasury.
Thank you, Chair. I think on the issue of late disbursement is not a mandate of COB per se, because at COB we release funds once Treasury has released funds. So if Treasury delays in releasing funds, then we cannot give approval for those requisitions. That is the position.
But you can also tell us that sometimes you take long to process requisitions.
Okay, that is really an allegation, I can say. Requisitions are approved based on how they are supported. So if they are not well supported, then there are reasons given as to why the requisition is not approved and what is supposed to happen. So this is a case by case. Unless it is a specific case, then it can be explained.
Okay, honorable members, your comments, questions? Again, this relates to issue of independence. Yeah, to some extent. Mark.
Chair, I just want to confirm what you're saying, because if it was an independent municipality, they'd be telling us low revenue collection and not dependence on transfers from the county government. Thank you, Chair.
But they will still depend. You have heard what the governor said. Sometimes the revenues are not enough. So the county has to support them.
And Chair, that is why they need to apply the Urban Area Cities Act would have come out clearly. We'd be able to see that that municipality is not collecting enough. But otherwise, as of now, I'm not sure we're able to analyze and confirm that the revenues are not adequate. But once the operationalization of the Urban Areas and Cities Act is done, then it will be very clear even to the committee that that particular municipality is probably not collecting enough revenue. Thank you, Chair.
Okay. I think if there is no further comment on that, honorable members, I think we are going to give an interim recommendation on the matter of budgetary control and performance, because as the auditor has indicated, the budget also did not balance, and the funding of the budget was actually underfunded. So we will just give a written recommendation on that. So, honorable members, before I conclude, I will ask the governor to make closing remarks. But maybe before I ask the governor, let me specially recognize the MCS who have come and allow them to, one of them to say something on behalf of the others. Just a closing remark.
Thank you, Chair. On behalf of Public Accounts Committee, we've processed these reports as a committee and shared with your office. Secondly, I wish to commend the Mumias municipality because their first report, which was for 22 months, had an adverse opinion. But as you can see, it is now an unqualified opinion. So I think they still have a chance to move to a qualified opinion. Thank you.
Very well. Mheshimiwa Kelvin. Governor, your closing remarks.
Yeah, first I want to thank the committee for our conversation. We'll be very glad to see a long-term solution to the matters of the loans from the World Bank, because this cuts across all the 47 counties where WSPs are forced to shoulder and accrue the interest charges in their financials. So that is a conversation that we are looking forward for the support from this committee and the entire Senate. Number two, I want to state here and now that devolution is under attack because there is a systematic attempt by the national government to frustrate counties through budgetary controls, where we've seen situations that the national government is actually giving us itemized budget for devolved functions, which are actually not supposed to be done by MDS, to an extent that counties are now being underfunded because some of the devolved functions are still being done by MDAs in the national government. I think that is an area that we are seeking support from the Senate so that the functions for the counties should be devolved and attendant resources should follow the functions. We have library services which were transferred